This content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained on here constitutes a solicitation, recommendation, endorsement, or offer by Draper Goren Holm or any third-party service provider to buy or sell any securities or other financial instruments whatsoever.
Hey everyone, it is me. We are here. Joseph is here too. Say hi, Joseph.
Hey, what's up?
Boom, boom, boom. We're recording.
Good morning, everyone.
Hey, everyone.
Hey, everyone.
Hey, everyone.
Hey, everyone.
I am recording this on the computer now.
Hey, everyone.
Hey, everyone.
Hey, everyone.
Hey, everyone.
Boom. All right. It says it's recording. Boom, 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 boom. I am apparently recording.
The entire bottle of control. They're all exactly the same.
Crypto art, and then what it really is an NFT.
Wow. Eddie wants to slap the bag.
So this is the next best thing.
DeFi is going to be a bubble.
It's provably scarce.
With Mad Dog.
Crypto, gold, and silver.
Transparent substance.
Take my money, start a war with it.
Without further ado.
Cheers to you, brother.
Get shit done.
Because the system has to collapse before that.
Our corona.
Cheers, I feel much better now.
Cheers.
Wow, that was heavy.
Boom. Welcome. Blockchain and Booze, number 142. Ooh, I've got some thoughts about the numbers in a second. I look like a crazy person. This is great. Corey, how you doing?
Doing great. Happy to be here with you.
Yeah, I'm stoked to have you back. I think today's topic is going to be a fun one. I'd welcome some feedback, questions, and thoughts from the crew if you're watching live. Before I get started, I want to thank Lunar Crush for streaming us live on Twitter, Blockchain Radio for syndicating it. If you're watching in any of those places, head over to blockchainbooze.io. It'll redirect you to our DGH events platform. You can sign up if you haven't already, and you can be hanging out in the chat there. Otherwise, if you chat, on YouTube or anywhere else, we could bring it up on the screen. But we generally watch that chat and have fun with the community. I'm already seeing Adele in there, and Ben, Kevin. I saw Joe was already in there earlier. So I'm stoked to see you guys. Cheers. I feel like I'm a bit losing my voice. Speaking about Lunar Crush, I was back-to-back calls all day, and then I just was doing a hang session with Joe. So many cool things happening on all fronts. But we've got Corey from Dolomite in with us today. We're going to talk about decentralized exchanges. I was actually thinking, I wish that I could pause things in the intro video, because what's interesting is in the intro video, right? I took, a bunch of little clips from different live streams that I've done over the years. Some of them was a random clip of Adam Draper. That was actually years ago when I was doing these funny I called them eavesdropping on Alon's conversations. I would just literally zoom. I would shoot text to people like the one I did with Adam Draper. But Adam, can you hop on for 10 minutes and explain something to me? And he'd be like, all right, let's do it. And I'd record the conversation and just post it on YouTube. And I remember talking to him really early about DEXs. And one of the reasons why I was thinking about this right now is because when I was going through that, the different booms and the different, me giving someone a hard time about, yeah, we're live, dude, whatever I say on the thing. I was looking at the faces, and if you look at those faces, right, there was the one where I was joking around. The only thing I remember about it, which I don't know if this is good or bad, but there was one of David Blesnak on there where I kept telling him he needed to come up with a tagline, because he did the stream with me from his kitchen. And I kept telling him, you need to have a new tagline, now you're cooking with crypto or something. And I was trying to if you know David, he would definitely not be the dude that would come up with a tagline like that. But thinking about David, he was the first person ever. His company Total were the first people to ever route decentralized trades across different decentralized exchanges. Kind of like what we take for granted now with things like One Inch or with Debanked or
Yeah.
X. They were doing it before any of them on Total, and it was really, really cool. And then I saw, for a glimpse, there was a guy named Mark Boiron, who I always would have to talk about security tokens and talk about just regulation in crypto, because he's one of the top lawyers, attorneys that understood what crypto was early. And now he's general counsel for DYDX. And like, I'm looking at that because I don't feel like we do enough content about decentralized exchanges and why everyone should trade on DEXs and why DeFi is important. But then I see those things and I'm like, maybe we have had some good conversations. We've had some good people. We've had some pioneers like who really started off this space.
I feel like the DEXs in general have just been like this undertone of a constant almost for the past couple of years, where people will allude to them or talk about them in passing, because there's been like, even though DEXs themselves are so innovative, we just get caught up in like the other things that are going on in crypto. And it's almost like we take them for granted and we're like, oh yeah, DEX is cool. All right, what's the next thing that's going on right now?
Well, what I think part of it, and I think we'll dive into why I think they're so important, and we need to actually have you reintroduce yourself for folks who haven't met you yet. I hang out with you so much, especially lately, that like I feel like this is just a continuation of a hang session, but there are probably some people in the chat that haven't met you yet. So let's do it. But just quickly, I think a part of that feeling with DEXs maybe is that it started off with actually, I'm gonna talk too much if I don't do it. Corey, give everyone the fast background on you. Give them a little update on Dolomite, because you came on when you launched, and now it's grown a little bit. There's already some new features. You've been live for about 2 months now. So give everyone the update, tell them what Dolomite is and everything. And then I have some thoughts about the somebody in the chat, but Dolomite.
Cool.
Oh, by the way, the movie was great.
Oh, you did watch it finally?
We should have
That'll
like
be a separate topic in the call. Just do like a
party.
movie review for it.
We should. I have ideas for sure, but go ahead, give us the update on Dolomite and your background and everything before we jump.
Sure. So once again, Corey Caplan from Dolomite, one of the two co-founders for it, the other co-founder being Adam Nucky. We started Dolomite back in early 2018 as a spin-off from working with the Loopring Foundation on some early bounties for them and other contributions to their open source project. It since has evolved dramatically since then, but we've been in the industry for quite some time, though, building on Ethereum smart contracts. We have a huge array of domain expertise ranging from smart contract development to infrastructure. Just part of the pain points of being so early on is that we didn't have a lot of the cool things to work with that we have today. But we launched a new version of Dolomite on October 13th, and it's grown a little bit since then. We're very happy with how things have been progressing. We actually just put live a couple days ago the borrow page for it, because Dolomite is a decentralized exchange, but it also offers margin trading and borrowing and lending capabilities as well. So we're starting to highlight some of those borrowing features to tie together some really cool things as the project progresses and we start to hit some timeline items. So
that's really cool. And so here, that what you just said, right? So kind of lends to where I was actually going with this. And then Kevin actually asked, we should ask, why is it called Dolomite? What made you guys think of that name?
I'm laughing because I just love the story for this. My co-founder is a very pragmatic individual, and we were looking for cool words to just call our company back in the day. So he dumped an entire dictionary into a Word document, and we went word by word highlighting things that we thought were cool. And then we cross-referenced it with, was the domain name available? Was the social media handles available? And just very basic things like that. Like, could people spell it? Just, is it spellable for people?
There needs to be a script. There needs to be like a simple script for something like that, right? Like.
I'm sure that someone could automate that pretty easily nowadays.
Yeah,
but,
I mean, like, or even just not like finding the word, but just put in a word and is Twitter, Facebook, Telegram. Maybe not Telegram is not that important to have the exact name, but like, Reddit, like these certain things are all the usernames on the biggest platforms available and what domains are available, .com, .io, .whatever.
Yeah. So we took that approach to it, and Dolomite stuck out to us as not just being available, but also being really cool. And this is back in early 2018. So if you want the clocks back a second, almost every exchange, decentralized exchange that was coming out around the time had either coin, bit, X, DEX, SEX in the name. And they were all indistinguishable from each other with the exception of a couple like Gemini, Coinbase, Kraken that had unique names and could elicit feelings. But all these other ones that just had coin in their name or whatever were just like in this sea of mess that you couldn't tell apart who was who. So we wanted to have something that had that thingness to it. As a close friend of mine recently said, like, oh, it has like a thingness to it. You can attribute it to something. I'm like, yes, like that's how you describe
it. It does. It feels stronger. It feels like an element. It is a mountain range, but it feels like when I first heard it, I thought it was like maybe some kind of like a metal or something, like an element of something that I didn't know. And I was like, I looked it up and I was like, wait. Kevin actually said that the part of the Tezos lore is that Kathleen did something pretty similar. And that's how they came up with Tezos. Like she wrote a script, searched for all the domain names that were available, and then like which ones were most pronounceable in English and stuff. And Tezos came up.
Yeah, one of the great things with Tezos is just people can spell it easily. I still see a lot of people online like misspelling Ethereum and not knowing how to spell it. So just even very basic things like that. I remember during the 2021 bull run when ETH had been popping off on Twitter, like you would see trending and it spelled Ethereum out, but incorrectly because everyone was like hashtagging Ethereum spelled incorrectly. And I was like, gosh, we are still so early.
That's pretty cool. You know, what's funny is that I speak text all the time, and it's sometimes when I'm just sitting at my desk. I don't know, like I've just gotten into that rhythm. I'm actually doing it less because I tweeted about this. The texting, they updated it, and I realized I've changed the way I speak, like to my phone. Like I've somehow reconditioned the way I talk. The second I hit the button, I like enunciate words differently and I say things and then I dictate it, right? And they've updated the algorithm or something. It's just not working as well. But I've noticed that every time I talk about Ethereum or ETH, it's something else comes up. It's never Ethereum, and it's always something. Whenever I talk about Tezos, it does come up properly. That is maybe something people should be thinking about, right? Like the spelling, the pronunciation, the everything, and not just from the obvious standpoint of like, are people going to pronounce it right, but are the bots going to understand the humans that are talking about it?
Yeah, there's a lot that goes into it, and people just gloss over the name or struggle with it, and I could definitely see why, which is why we took that very simple approach, just like going word by word.
Oh man, I don't know if Kevin meant this, but I think he did. But he put Dolomite, right? And then it made me think of Dollar. Oh no, because you put the movie thing up above. I read it as like Dollar. Am I right? Like
no.
all as one
movie
thing.
Also. So that was actually something that came up when we were looking at the name. We were like, what is this Dolomite thing? Like this movie. But of course, it was spelled a bit differently. So we actually purchased like Dolomite.io spelled that way. So if people think of the movie when they're spelling out our name, it does redirect back to our site, which was a fun little thing. But we should probably, like, when it redirects to our site, include like a little tag thing or something like that and put an Easter egg into the site also.
What I was thinking is it would be really funny, right? If you kind of just basic CSS change the interface, like throw the dude's like face somehow on it, like maybe even change some of the words, like instead of trade, use something, because the movie is so stylized and so insane, and the dude just like my name is Dolomite and I'm here to F people up, whatever, like his whole saying is like, fuck some motherfucking people up, like whatever it is, like that whole thing. And then, they made the movie recently about the guy's life, which is really funny. But how funny would it be if like you could take the lingo, do a thing, completely rebrand the colors, the style, the everything to be it? It would still be the same protocol, same thing, but just the problem is too many people would make the honest mistake of spelling it wrong and then not get the joke and be confused as hell and think like they're being hacked or something is going on. Because I don't know if
it'd be a fun like April 1st Easter egg to do something like that.
It would be a fun Easter egg. Like maybe if there's I bet you the family of that he's like a comedian, actor, personality guy. Like, I wonder if they have a charity they support or something, like somehow for some anniversary of something. It would be pretty cool to like, donate trading fees that happen through this interface to them and get like Snoop to do it. Because I watched some short documentaries about him and Snoop was talking about him. Dr. Dre was talking about him, how like he created the category. Yeah, his name is Rudy Ray Moore, right?
Yeah, that's right.
Like, and how cool would it be to somehow have some connection? Yeah, I think he passed away, Kevin. So that's why I was saying like, something in his honor as some kind of something. There's been some movies that have been made about him, and he kind of like created that category before rap even existed. Like he would do these things that. But anyway, going back to decentralized exchanges. So where I was going at the beginning, right, about the this, you mentioned that people kind of talk about it in phases, right? And right now is a perfect time to talk about it. There's obvious reasons with FTX and everything going on that, having non-custodial exchanges or exchanges where you can see where everything is on the smart contract. You can see everything transparently and everything else that's going on. We get that it's important. But going back to like why I think people kind of glazed over in different ways in the industry about DEXs, there we go. Yeah, Kevin said hire Eddie Murphy to reprise his role because he played Rudy Ray Moore in the biopic movie about him. So that would be awesome. Imagine if a DEX had like a mainstream commercial with somebody like Eddie Murphy in it. Like how
Well, if there's one DEX to do it, I guess it's got to be us.
and what's funny, what would be really funny about it is not just the fact that it would be like insanity that a DEX would do like a mainstream commercial like that. The fact that it would be more vulgar and like
it would definitely raise some eyebrows.
It doesn't have to be, but it would be pretty damn funny if it wasn't like, if it didn't even like, it wasn't like the Super Bowl commercials, right? Where it's all about like, let's just, get users and trade or whatever. Like it was like legit just a really funny piece of content that had,
the problem with it is like half the commercial would have to get bleeped out.
that would make it fun. Okay, I'm not going to keep reading the comments and things because I'm going to keep going down these rabbit holes about Rudy Ray Moore, which would be really funny. We need to have Rodney actually was like, you have to watch the movie. When we were hanging out at LA Blockchain Summit, Rodney Sampson was you could tell he was like, holy shit, it's called Dolomite. And then he started talking about the movie. He's like the movie? And I was like, wait, what? And then it all came together. It was really funny. But it would just be such a funny thing to do together. But going into what we were getting at, right, in relation to DEXs, decentralized finance, and what's kind of going on in the space, why it's so important. We get the FTX reasons and the centralization reasons why using a DEX is important. But then, we look at what happened, right? I mentioned having David Blesnak on, and that we were early investors in Total, which was the first DEX aggregator. And now that whole team is actually at Coinbase, which is very telling, right? Like, where things are going and how they believe in the space and what could be happening with DEXs and things behind the scene. But when we first started in crypto, at least for me, the first interaction with a DEX was Ether Delta. And if you remember what an insanely screwed up.
My hair just stood up as soon as you said that. That's like bringing back PTSD.
Dude,
I've seen some really smart people like lose a lot of money from just misusing it. Yeah. Getting funds trapped in there, fat fingering a trade where they just like misclick on which order they want to buy and they just lose tons of money and purchase
those
the wrong thing at the wrong
probably
quantity.
Still exist. It would be really interesting to see what's still locked in those contracts. Like how much ETH is just gone forever, because I know
altcoins that are irrelevant, but then plenty of ETH also that's stuck in there.
Oh, ETH that's stuck in there, all sorts of tokens stuck in there. But I remember a guy that I know, somebody that I worked with, and a friend of mine was using it. And, it was the only place to trade certain tokens sometimes, especially like those early days. This must have been 2016, maybe early 2017, something like that. And there was Ether Delta. Then there was, what was it? It was like the next iteration was called something else Delta.
Fork Delta?
What was that?
Are you thinking of Fork Delta?
Maybe Fork Delta. I don't remember. But anyway, it was Ether Delta, Fork Delta, all these things. And I remember I was hanging out working in the same co-working space with somebody. And I hear him go, Alon, come here. Alon, wait, get over here really quick. And he was like kind of frantic. And I was like, what is going on? I'm like, I finished doing whatever I was doing. I walk over and he's like, take a look at what I'm doing here. I don't know what just happened. I'm like, well, what do you mean? He's like, well, I put, I think it was $5,000 or $10,000 worth of ETH. And we're talking about in 2016, 17. So how much is that worth today?
I don't want to think about it.
You don't want to think about it. It was like something like 5 or 10 grand. It was really meaningful money, like to the point where like I hired a friend for him to see if he could somehow recover it. But the guy was using a notepad on one of his monitors, like notepad or text pad app, right, on his phone, on his computer. And remember, like when you had to deposit money into EtherDelta, similar to how you have to do on Dolomite now, but there wasn't, the interfaces for it wasn't that you would use your MetaMask, right, as the wallet that you connect to it. You would use your MetaMask to connect to it, but you would deposit it into your account, and it would give you a private key for your EtherDelta account, right? It was like a separate contract that you would get a private key for. When I created like my deposit account on EtherDelta, it would go, okay, here is your private key. You need this if you to gain access again. And I remember he was like copying and pasting things, and he was doing stuff. And he's like, these are my 5 wallets on EtherDelta, and I can't find my ETH. I was like, well, let's just go one by one, like show me what happened. And then he's doing it. And as he's doing it, I'm looking over his shoulder and I go, wallet number 3 and 4 or 2 and 3, whatever it is, those are the same exact private keys. And what happened was he fat fingered it somehow. You go Control C, Control V, and how sometimes it just doesn't take.
Yeah.
And he just pasted the same address twice. And it just happens to be that the one he had put his 10 grand into was the one he didn't copy correctly. And it was gone forever.
Oh gosh.
And we went through like, we did it. We had a security expert go into his like browser, try to like read the drive, like there's ways in which you can kind of read stuff that was displayed previously, and tried to do all sorts of things. It was just gone forever. And you could see it on Etherscan, right? You could see that it existed. You could see it was deposited there. There's no access to it because you don't have the private key. And that was that.
My heart breaks for situations like that.
Yeah.
And
Oh,
that was so early on too.
What's crazy is everyone had stories like that. Like it would happen all the time with like $50 or $20 and like test transactions and goofing around. But every once in a while, it would happen with something real, right? It would happen with, something crazy. And then you would hear stories with people with really crazy stuff, right? And the crazy thing is like, you could see if somebody was making it up or not. But then anyway, that existed, right? That was like the first DEX you could participate in. And there were starting to be other things, right? And that's when Total came in, created a much better user interface to trade across them and stuff. And that was great. But, as things went, we got Uniswap. We got some of the tools like that. And it made it easier to use. It got better. The systems got better. By the way, even when you used Uniswap at the beginning, like 25% of the transactions would just fail. Like you didn't know why. Like it just didn't work. Right. And
the user experience was pretty suboptimal at the time with displaying to users what the heck is going on.
Well, I mean, in general, the user experience today is orders of magnitude better than back then. But if you are somebody who's never participated and you're coming for the first time, the user experience is still not good for most.
There's a bit of a learning curve. There's also like, hey, I've went through this before, and now things are simpler from what it was back then. So you feel like a veteran almost, and any of the issues that come across, you're like, oh, I could deal with this, no problem.
Yeah.
But I remember like looking at the Uniswap interface code from way back when, and like for the longest time, the only error that they would display whenever there was any kind of swapping issue was there might be an issue with the token you're swapping, or it's to like increase your gas price. And to any ordinary user that's not technical, that's like the biggest nothing burger that you could serve them. What do you do with that?
Well, also, we would think about gas fees even back then when they were 50 cents, $1. when they would get to be that price, we were like already thinking in our minds, this is astronomical. This is too much. Like, this doesn't make sense.
Yeah,
Now,
like even
now,
peak
like, so
2017
what? Am I
went
supposed
to
to pay $10 to swap something that's like worth $50? Like, because most of the time, little swaps are little swaps. Like, oh, I want to trade this token so I could go mint a thing or test something and goof around.
I think what's important to bring up if you're talking about the history of DEXs is not just the on-chain liquidity ones, like you had Bancor, you had Ether Delta, you had Uniswap that came up. And those are the ones that Total was able to integrate with, which gave Total its value. But the issue is, if you look at the older version of Dolomite, it was more like a decentralized Coinbase where you still traded right from your own wallet. You would still trade tokens from there. But we still had what we called a trade execution coordinator, which worked similar to an order matching engine. So the liquidity really resided off-chain, and there was still like a lot of off-chain logic that was responsible for pairing the trades together, then actually executing them on-chain. So people would submit limit orders to our server system, to our execution coordinator for actually broadcasting them, and that added a lot of complexity. So like there was a lot more engineering overhead for us to manage it, and then it made it incompatible with products like Total because the liquidity did not technically reside on-chain unless we had a way to send that data on-chain in a secure manner before it settled. And I remember talking to David in the business development team for a while. Like there were like plenty of times where like, hey, is there a way for us to put Dolomite on here yet? We're like, no, unfortunately not. It's just it just takes such a large effort. And that's part of the reason why we spun into this new version we have today, where everything resides on chain and it's as decentralized as possible. At the time, there was no on-chain economy.
I think I also assume that if you were doing these kind of limit orders and things like that, people would have to pre-approve transactions in their wallet and do things that like best practices tell us today you shouldn't do those kind of things, because they're for every really cool use case like what you're talking about, there's too many scammy things going on where you give access and then, you know, things happen. David Rankin mentioned Curve, which was like the ultimate horrible interface, but it
was like a joke how funny, like how bad it was. Like
it
just like leaned
it
into
purposely kind of stylized it, right, with like the 2-bit kind of art and basic stuff to purposely make it like that. But it's interesting. Yeah, well, that's like a thing we should actually talk to Corey about. He mentioned decentralizing oracles as well. But going back to where I'm going with this over lengthy kind of history of what's going on here is, at the end of the day, I think the average person today, like anytime I want to do something, right? If I would go, oh, I want to take this token off of Tezos, bridge it over to Ethereum, and then I swap it to, ApeCoin so I could, buy a t-shirt on their site, right? Like I can do all of that right on decentralized exchanges now. And it's pretty radical. And I don't have to worry about connecting my credit card or using something like Coinbase, whitelisting an address, waiting 48 hours, doing all the things that, so for me, because I know how to do it, the experience is better. User interface, maybe not better, for the average person, but for me, the experience is better. And using DEXs more often for sort of everyday things like swapping from one coin to another so I could participate in something, or going, okay, I got this airdrop from this thing, I held on to it because, why not? It was free, but now I want to buy this NFT. I don't have enough ETH, so I'm going to swap it and whatever. So basic swaps and things like that have become like just normal and a given for decentralized exchanges. But I feel like, although there is, much more on the lending and borrowing side with like Aave and things like that, there just hasn't been the innovation, right, in decentralized exchanges that make it worthy to use for more complex transactions, and also to make it feel comfortable even for borrowing and lending for the average person. But like mostly where I'm getting at is there hasn't been a lot of innovation in terms of like making those basic trades that you take for granted, like you mentioned, limit orders and things like that. Like, I don't think most people, I think 90% of DEX transaction, I would assume, are just market rate swaps, right? Like just swap from one token to another. And just to even just make a trade with some basic parameters being changed, just don't really exist on DEXs yet. And that's part of what got me really excited about what you guys were doing at Dolomite. But can you maybe talk to like why that innovation hasn't happened? Is it just,
I'd say it happened, and it's happened or is happening in certain places, but it's just not popularized yet. And it's mainly because like the bigger players just haven't focused on providing those kinds of services or building it out. Like Uniswap, when you go there, they don't have that. But there's been like auxiliary services created for Uniswap that offer this on different websites, but they're just like not as prominent, not as easy to see. And a lot of the difficulty with it, and I'm sure the Uniswap team has thought about adding it, but there's complexities around making those limit orders as decentralized as possible. And there's different trade-offs in how you want to potentially execute them. I think one of the better interfaces for executing them has been on the aggregators, actually, like 1inch or Paraswap. But really the way that those market orders work, those limit orders work, is they're actually more like limit orders that are waiting to get executed, like market orders. So a real limit order or a true one on a centralized exchange is if you have $100 and you want to go buy ETH with it, you basically put a buy order on the book, a limit order, and it adds to the liquidity of the overall system. So that if another player wants to come through and market by $1,000, like it'll hit your $100 and then keep chewing along until $1,000 has been filled. You're taking the other side of that trade. But the way a lot of these other systems have unfortunately created limit orders, which is part of the reason why they aren't as popular yet, is because they've done it like a decentralized market order where they wait for the price to reach a certain point, then they execute a market order, and if it's within your price parameters and other things like an expiration, for example, it'll execute. So on the contrast with that, Dolomite actually has the ability to build in native limit orders, other things as well, but there's still like liquidity constraints with it and like other structural issues, because if you want to do it on chain, you're working with Solidity. Solidity as a programming language and as a platform that connects to the EVM just isn't as snappy or as quick as a centralized exchange would be, which is why we started to see like Uniswap innovate and kind of make a pseudo limit order system with their concentrated liquidity. Yeah, you can spin that to make it work that way, but there's still key features missing with it that make it problematic for just using it as a true limit order based system. So I think that we're getting there, but it's still a little bit of a ways away. And like key players are going to end up rolling that out soon over the next bear market cycle.
Yeah, I kind of look at like DEXs in kind of two categories, right? Like I think there is the everyday person that wants to use them because they self-custody their crypto, right? And the idea of sending it to a centralized exchange, making a trade, and then sending it back and doing things like that is just overcomplicated for no reason. And then I think, and people who are told like over and over again and who are scared of those centralized exchanges and stuff like that and keeping their crypto there, you should do it that way. And so I think there's that user, right? And I mostly fall into that category. I'm not executing any complex trades, or when I ask you all the time to explain to me like what exactly does it mean to put in a put call in this way and whatever, because I'm not that guy and I just don't know it. And so I think that's the average person. I think that's something that people need to, I think the industry needs to make an effort to make their products more usable for that person, because I think there's a lot of them, right? We've talked about it a little bit privately, and I talked about it the other day and talked about it with like the Lunar Crush guys, right? Like there's the average user of Lunar Crush making some of these kind of bets versus the like power users who are hardcore traders. Now, the power user hardcore traders are the people who kind of don't have a choice but to use those centralized exchanges, because those hardcore features and ideas and limits and puts and things like that, like the more complex, doesn't even exist in the DEX world. And if it does, it exists in some very small way. And even with like synthetic assets, and those synthetic assets make it not very compliant for the United States. Also, there's an issue there. But anyway, just not even giving a shit about compliance, like just those products don't exist, right? Like if you're a hedge fund trader or somebody who really wants to do really hardcore trading, you don't have a DEX you can use yet.
Yeah, and that's part of the unfortunate side effect of liquidity still growing for DEXs and the fees coming down to make them more competitive with centralized exchanges. Like there's still like this tipping point that's been slowly happening over the past year or so. Like we saw back in November when FTX crumbled, that Uniswap had surpassed had surpassed Coinbase for Ethereum trading volume. It was second only to Binance at that point. So there's good things happening there with that liquidity tipping point and fees coming down to make it more competitive. But then the second part of the complexity is a lot of these like power traders or hedge funds, they're not always just trading Ethereum or USDC. They might be trading that, but they're looking to trade it with leverage potentially or in different quantities in order to be able to maintain certain portfolio balances. Like they'll want to keep a certain cash balance on hand while holding Ethereum so that they're able to continue buying the dip, for example, or market making, depending on what their strategy or what their outlook is. And because a lot of decentralized exchanges are very siloed in their feature set, it makes it really tough for them to want to participate or otherwise allocate capital to them without running complex systems, because they have to send funds between different DEXs or potentially fund different wallets to not cross-contaminate them. Because Uniswap, as great as it is, only offers spot trading where you're trading like ETH for USDC. There's no access to leverage or other things as well. Aave is fantastic, but what Aave really would need to do over the long term is combine their borrowing features with a trading protocol like Uniswap to have it be maximally useful, because that would allow people to get access to leverage with actual hard assets then. And as my shameless plug for Dolomite, that's exactly what we're looking to do with our platform longer term, is basically build out this sandbox where if traders want to come to our platform on our interface at dolomite.io and use it, they can do it that way, or they can do the more pure DeFi approach of building smart contracts and systems that plug into our platform that have it work with their system. We're programmable and accessible from day one as well from that perspective. And by building things in this more sandbox-like approach, it allows us to build up these really cool network effects of, as we migrate from not just ETH and USDC, but for example, WBTC trading and other things as well. As soon as we add WBTC, we're able to tap into the already existing USDC liquidity for people to open up margin trades with it. So there's network effects where each next asset that we add gets benefited by the previous assets that are already in there. Then if we also add new financial instruments like options or other things like that in the future as well, those can play very well within our system too, because our protocol is built as a very strong base layer where we can plug in new modules on top of it. Those modules can be anything from new pricing models to make us more competitive to even new financial instruments. And we're really excited to be able to tie these things together in a very concise, easy to use manner. I mean, you can even go to our site right now and try it out, and you'll see that there's already like a very easy to follow tour where it walks you through how to use the platform. Our liquidity isn't great at the moment for people that want to execute very large trades, and the fees aren't as competitive as other places yet, but we're trying to break down that barrier of making it easier. And then over time, we're envisioning that liquidity getting better as our protocol is adopted more. So we're still in our early stages, but you can see the seeds are already planted for liquidity to get better and execution to get better over time.
So actually, I've got this thought. David Rankin in the chat just said, someone needs to fork liquidity and use wrapped Bitcoin instead of ETH for backing on a stable coin. But what that triggered in my mind was some thoughts based on things you'd sent me. As far as I know, most of the places where I can lend and borrow and stuff like that, I can put in ETH, I can put in USDC or one of the other US dollar backed coins. Sometimes they put in wrapped Bitcoin, but then I can borrow US dollar denominated against it, right? I haven't really seen many places where you have many more pairs than that, or ideas of like trading, sort of borrowing against, and I guess you can get USDC and instantly swap it for something else, but the general idea of doing one against another, I think would be really, really interesting, and having sort of different pairs and ideas and shorting or longing tokens against other tokens versus US dollar. Because to me,
that's exactly what we're able to offer. It's not shown in our interface at the moment, but on a protocol level, we can offer this immediately, where you could take out debt denominated in WBTC and then go long Chainlink if you want. So that it's basically a pair trade between the ratio of the link price against WBTC. And there's no like cross trades in the middle in order to do that. It's direct from one to the other. And the issue with what you just described of like taking out debt denominated in USDC and then like swapping it to WBTC is that USD is going to always remain stable at $1. But if the WBTC loses value and goes down, you're going to be at risk of being liquidated because your debt is denominated in the dollar, which hasn't fluctuated in value.
Yeah.
So it's part of the difficulty with doing things like that. And that's a huge vision for our platform, is capturing that.
Yeah, I want to break that down for a second. So for example, I want to trade, I'm going to make up some numbers here. So let's pretend Bitcoin is at 10K. We're at, that one first awesome prediction. Everyone like Bitcoin 10K, right? Let's pretend Bitcoin's 10K today. Which, by the way, it's so funny, right? We're like constantly like looking at prices of things like Ethereum and Bitcoin and going like being really sad about their price, but also thinking back on Ether Delta or things like that. And during those times, if we would have said Ethereum or Bitcoin were going to be at the prices they are today, our minds would be fucking blown. Like we'd be like, holy crap, yeah, right, you're out of your mind.
We have this recency bias where like it's already at 1,000. Like when's ETH going to 5,000? We're like, no one's appreciative for the fact that it went to $1,000 and it's still staying above there right now. Like, come on, guys.
It's the most human thing about us, right? Like, it's just like, of course, like we're disappointed today because it's like, it's just unfortunately a part of being human. I think like as much as
the constant need for progress like that.
Yeah. It's none of us have any real gratitude.
Short term.
Exactly. But okay. So going back to what we were saying, let's pretend Bitcoin is 10K. Actually, it shouldn't even matter. Let's pretend Bitcoin is worth 1 Bitcoin worth 10 ETH, right? Actually, somewhat close, maybe. Actually, not exactly, but let's go. Okay, 1 Bitcoin is worth 10 ETH. Now, right now, if I take my wrapped Bitcoin on Aave or somewhere else, I borrow $50,000 against it. I know that if my Bitcoin goes below that threshold in US dollar value, I get liquidated. You're saying that you will be able to, if 1 Bitcoin is worth 10 ETH and I borrow 5 ETH against it, when Bitcoin is worth 5 ETH, not the US dollar equivalent of 5 ETH, but actually 5 ETH, then that's when I will get liquidated. So if they correlate together and they go down together and go up together, I don't have the risk of being liquidated because I'm
That's
actually
correct.
Okay. To me, that's a huge deal because I sort of and I'll let everyone into my way of thinking in crypto, and what I do is when I buy an NFT and it goes up in value, I mostly just hold everything because I'm probably because I'm stupid, but I'm nostalgic or whatever. And I didn't buy it for like profit reasons. And that's why I'm a bad trader. And
just diamond hands.
But when I own buy 10 NFTs on a certain drop, and one of them goes above a certain price, I sell 1 or 2 of them and I throw the ETH into a separate bucket as a sort of a savings account. I have a Bitcoin sort of savings account, an ETH savings account, a Tezos savings account. And in my mind, at one point in my early days, my goal was get to a certain number of ETH, get to a certain number of Bitcoin, get to a certain number of Tezos. And I kept working at that. And I was always optimizing for more of that. And I never paid attention to the US dollar value because to me, that's what my normal paycheck is for. That's what my bank account is for. That's what the savings account is for paying my mortgage, paying for my condo and whatever the heck else, right? That's kind of how I live my day-to-day life. But in this crypto bucket, I think about that's like my retirement, right? And so I always had these numbers. I finally got to them at some point, and now I'm adding to them and I have different goals and ideas, but I'm constantly optimizing for like, I honestly don't care that much about the dollar value. What I really am stoked about is when I have opportunities, when I go like 1 ETH turned to 1.1 ETH, I won, right? Like that's it. Like, and so I love this idea of being able to borrow and participate natively in the space in those ways.
Yeah, there were some really successful traders out there that, like back in September when the merge hit, people had realized it was an overhyped narrative over the short term because the merge is super awesome for ETH long term. It's really good for its supply side issuance and other things that people have talked about at great lengths on various media platforms. But over the short term, it was like an overcrowded trade. So what people did was they didn't want to bet against Ethereum going up still in terms of dollars, but they thought like, Bitcoin was primed for a pump at that point because like no one had been caring about Bitcoin. It was like everyone cared about ETH. So a lot of like popular traders did, in order to avoid getting blown out by opening up a short position against the dollar was they instead shorted ETH against WBTC or Bitcoin in this case, which allowed them to do a very nice pair trade with that, over the next month or so after the merge, paid off really well for those people that took that smart bet. I'm saying that it's smart now because in hindsight it worked and it paid out well, but the logic behind it was also sound because, as Alon really correctly mentioned, there's great historical data that tracks this. The assets are pretty well correlated, but then you have like certain times that narratives will take form where Bitcoin's awesome and everyone forgets about ETH and ETH stagnates, and then vice versa. And the ability to pair trade them during a bull market when everything's going up makes it a lot easier to avoid getting blown up by mistiming a short position because everything's going up against the dollar, but some things are going up faster or slower relative to each other. And that's actually one of the reasons that made FTX so popular back in the day when they had this whole entire we're for traders, by traders sort of mantra. They allowed a lot of users, or not a lot of users, their platform allowed users to cross margin across many different assets, of course with different risk profiles attached to it, and it was pretty interesting. But this idea of cross margining between different assets like this was not a concept that was created by FTX, but it was something that was helped popularized by it because people could capture alpha or these really unique ideas that were otherwise hard to encapsulate.
Well, it's interesting, right? Because I will sometimes I'll look at what I have in my wallet, right? And this wasn't pre-planned or some smart trade, or it might not be even smart in the moment, but I'll look, for example, and be ETH, I'll if ETH happens to be down and I go I want to buy some ETH, or I just get this idea in my head that I want to, in my kind of hot wallet that I play games with, I go, ooh, ETH is down, I should swap something for ETH. I'll look for the thing that happens to be up at that moment and be oh, that thing's up, I'm going to swap it for ETH that's down, and I get a little bit more than if, whatever. And it just feels good.
You get it. You're doing that already. You just don't don't realize it almost. It's implicit.
But to kind of have a longer term, smarter bets on things like that, right? There's some just interesting ideas because there's certain tokens and things that I just think, I don't know. There's very few that I fully, truly, really insanely long-term believe in. But I've been talking a lot about ApeCoin and stuff like that. I have no idea what's going to happen long-term because I have no real insight into anything other than what's publicly talked about and whatever. But do I think it's going to exist? Do I think, there's going to be many ups and downs along the way as they launch things, new things, for sure, right? And so there could be a different strategy there with what I do with that versus my Ethereum, which I definitely 1,000,000% would keep in a savings account and things like that, right? And then you can look at your outlook and your feelings about things and have totally different complex long-term bets with utilizing a system like that versus just, oh, I can leverage my Ethereum by borrowing against it. I could borrow US dollars against it. I could leverage my ApeCoin. But what's interesting though too is you can do the opposite of what people are forced to do right now. Right now, I'm thinking out loud right now, and maybe this is a stupid idea, I'm not sure, but I think there's some interesting thoughts here. Sorry, I've had three quarters of a drink. Actually, this is probably mostly ice water at this point, so maybe I had most of it. But so previously, I want to borrow against my Bitcoin. But let's say I was doing it to buy ApeCoin because I think ApeCoin is undervalued at this moment and I want to have more of it and I think it's going to pop, and I'm going to then sell my ApeCoin, pay back the loan, and then I'm going to have extra ApeCoin, and now I got free ApeCoin, right? That let's say that was my bet at this moment. Now, to do that, I would take my Bitcoin or Ethereum, borrow USDC against it, buy the ApeCoin, do that thing. Now, if I believe that ApeCoin is more correlated to ETH or opposite, ETH is going to go up, this is going to go down or something like that, I could open up a position where I do, borrow ApeCoin against ETH and swap it instantly to US dollars or something else. And if I think that, I'm trying to figure out which direction it has to go, but ETH value goes up and ApeCoin goes down in that, then I actually technically US dollar value have to pay back much less US dollar value of ApeCoin to pull
As
out.
long as ApeCoin goes
right?
down at the moment you selling it, then you'd be effectively shorting ApeCoin but collateralizing it with your ETH. On the flip side of that, if ApeCoin goes up a little bit, but Ethereum goes
David
up,
said it will either go 100% one way or the other. Thanks.
yeah, simplifying it, yeah. But if ApeCoin goes up a little bit and you're holding USDC, you would have lost money, even if ETH went up by a lot. What you'd have to do in that situation to encapsulate that correlation, as you mentioned, where you think that one goes up maybe a little bit and ETH goes up a lot more, is you want to immediately sell the ApeCoin back to ETH, then deposit the ETH back into your position to recollateralize it with more capital then. Because that would put you into the best position to capture the alpha that you're describing. But it's important to note, like also with this kind of trading, like it does come with substantial risk. And when you're caught on the wrong side of the trade, you lose more than what you would have lost otherwise if you just like bought an asset that went down. And that's part of the reason why like we've seen so many blowups happen this past year, because people didn't manage this risk properly of setting rules for themselves. And the biggest thing that differentiates
you're essentially leverage trading even without like doing it in the normal way, right? Because you're borrowing against your ETH. You're basically hoping that you're able to make this trade and also keep your ETH. And so you're kind of like double dipping in a way, versus if you just made a normal trade.
Yeah, exactly.
Correct?
Like there's no free lunch here. Like if you win, you win big. If you lose, you're going to lose big then.
Does everyone remember Econ 101 at junior college? Tanstoffel or something? What was it? Like there ain't no such thing as a free lunch. Sorry, you just gave me like a weird flashback to Moore Park College.
I'm glad I was nostalgic for you. But yeah, I mean, beyond that though, like it's important to remember that though, because a lot of people just don't think about like what the other side of the trade looks like. And I think one of my favorite sayings that I heard from a close friend that's really good at trading is it doesn't boil down to like what your wins are. It's really about how you protect yourself from losses. And the biggest thing that distinguishes trading from gambling are the rules that you follow while you're trading. If you don't have rules set up, then you're basically gambling.
Yeah.
And a rule could be like, I want to lever along an ETH because it's at $1,000 right now. So I'm going to borrow extra USDC, purchase more of it. And if ETH goes to $800 a coin or $900 a coin, I'm going to cut the trade, meaning I'm going to, lick my wounds. I lost money there, but I'm going to live to fight it another day. As opposed to just like, I don't know, I think it's going to rebound at some point and it's going to come back.
Let's double down.
You can't do that with leverage.
Yeah.
And
that's probably a bit of what happened with like FTX, right? Like somebody who's like an insanely, at least they thought they were, and the public believe they're an insanely good trader based on, it's really.
in all fairness, like Alon, you're a better trader than FTX and Alameda are because like you outlived them.
Yeah, but that's the thing, right? Like somebody could do something insane and they go like, I'll make it up on the next one, right? And that's the full degen gambling,
that's game over right there
in
terms of your mentality, and that's dangerous. But one of the things that's interesting though with leverage that people usually gloss over is they usually use it as a tool for speculation, which is how a lot of the synthetic leverage has been used on DEXs today. But it's also important to take a step back, and if you actually look at like I think it's on Kraken, if you like try to enable margin for your account, they'll like have you like go through this extensive checkbox of like before you do it, you have to like check off that you're using it for hedging or like you're extremely high net worth individual. I forget all the criteria for it, but I do distinctly remember like hedging being like one of the use cases. That leverage is actually an excellent use case, not just for speculation, but in environments like today, especially where we're looking at more of like a downturn market, it's great for hedging your portfolio, like for protecting yourself against further losses, or if you're running like a certain yield generating strategy, being able to prevent making yourself susceptible to price movement, and instead just trying to capture the yield from your strategy instead of like the actual price movement from it itself. There's really interesting use cases like that we see more sophisticated firms take on. And that's part of the use case that we're looking to tackle with the leverage that we offer on Dolomite. It's not just going to be a tool for speculation. We think it's an excellent tool for hedging your yield farming strategies and things like that as well.
It's interesting. You mentioned to me in the past, right? So one of the things here's a throwback, and I wonder if we have this. We have to have this on YouTube or something. I'm 90% sure it was on Blockchain and Booze, and this would actually be a really interesting thing to go back and look for. I'm going to try to look for it after this. But we had, for example, I think it was Alex Mashinsky on here. Maybe it was somebody else from Celsius. I know I've had this conversation with him. I'm wondering if it was on Blockchain and Booze or not. But like Alex Mashinsky would say things, right? Like we had the flash crashes on chain or not on chain, but like in the DeFi ecosystem where a lot of people got liquidated in these manipulated markets, right? Where like the price of ETH got for 2 seconds, right? Got shot down. All the bots came in, liquidated everyone. Price came back up because equilibrium always happens, or because it was manipulated for a moment. And all these people got screwed, right? And the centralized exchanges in that moment went, see, this is why you need humans involved in your trading. When, for people who used Celsius to borrow money, you were able to, a human being would call you and say, hey, you have 24 hours, you have 48 hours to top up your account or you will be liquidated. But most people, because the price rebounded so quickly, didn't have to even worry about that. But in the decentralized world, it happened instantly, right? And you and I have discussed this a little bit. And, in hindsight, I would rather live in this world where there is those potential those potential things where I get liquidated in a DeFi world, because at least it's on chain and we find out the truth, versus what happens in the centralized world where they take your leverage,
Yeah. I mean, the example that he was specifically referring to, because I remember that, was not necessarily a failure of DeFi. There were some bad oracles that were being used for certain products. Like there was an example where it was Compound, for example, was quoting their DAI price from Coinbase specifically, like because that was the most liquid venue, instead of taking a more holistic approach of looking at the entirety of the market for like what the price was. So someone went along and realized, hey, there's only like $10 million in liquidity on Coinbase. So if I just go ahead and buy $10 million worth of DAI, the price is going to go from $1 to $1.30. And for those listening, I'm sure most of you realize this, but for those that don't, this thing I'm talking about, DAI, this token, is supposed to be pegged to the dollar.
Yeah.
It's not supposed to be volatile. It's supposed to be always worth $1 without fail. But under certain market conditions, clearly I'm discussing right now, someone was able to come along and purchase enough of it where they pushed the price up considerably above $1. And Compound had quoted the price from Coinbase. Now, there was a lot of debate about this, that Compound did nothing wrong. The price on Coinbase was genuinely $1.30 for a little while there, so it made sense to quote the price at $1.30. The Chainlink oracles, which was another oracle system, didn't quote the price at $1.30 because it wasn't sustained there long enough. And their oracle network has proven to be more robust than, looking at a single marketplace as your source of truth for what the price is. So we've seen like things like this happen.
Yeah.
And the learnings have been fantastic for being able to get to build up further robustness in the ecosystem, which we have today. And the proof is in the pudding at this point, with Aave still being in existence today. They're wholesome. Compound as well. And Alex Mashinsky and Celsius are currently, going bankrupt and filing for it. But the most interesting thing, though, which is both a blessing and a curse for DeFi, like we've seen the worst that could happen where oracles are misused and therefore you get liquidated instantaneously, as Alon put it. But the flip side of that is there is a positive to it. And the positive has been, when Alex Mashinsky and Celsius were going bankrupt earlier this year, they had to pay back their loans to Aave and to Compound before any of their centralized creditors in the court system. And we've seen this play out with Bernie Madoff.
Why did they have to do that first? Is it because that was the only way for them to get access to their collateral, right?
The only way to get access to their collateral back was to pay back their debt, or else the smart contracts enforce that they will get liquidated otherwise. So smart contracts have a higher place in the totem pole.
Yeah, they had to put it higher on the totem pole, because it's not like they can wait for the courts to say, okay, Wells Fargo, give them their money back. They have this much in collateral there, so subtract what they owe and send them back the rest. there isn't that. It's just there was a literally like, a timestamp and a countdown to when they would lose.
I mean, if you think about like all the people that have lost money in Celsius, and now they're a mixture of junior creditors or senior creditors that are waiting to get their money back to go through a bankruptcy process, which takes years. So by the way, if you put your life savings in there, you now have to go back to work, and you need to go work your butt off waiting for that bankruptcy hearing. You're also going to find out that you're getting 80 cents to the dollar for every dollar you put in, or 70 cents,
By the
50 cents.
I've been so offended on behalf of the people who are owed money, because I have like $4 and change or something in like dust of crypto that was on Celsius from different times when I tested it and played with it, got my free $100 from LA Blockchain Summit, and then transferred it to my wallet, whatever. Like I had my my little dust, and it was worth like $4 or $5 on Celsius. You know how many piles of paper I received at my office when I like finally went to check my mail after like not going for a few months? I had like super thick lawyer things for Celsius creditors that the shipping alone must have been 10 times what I even had on Celsius, and everyone else is paying for that. Like that's going to get paid for way before anyone gets their money back. And it drives me fucking nuts. Like it's such an inefficient, messed up process.
So meanwhile, like while you're waiting years for it to happen, and you find out as a creditor, you only got 50 cents back for every dollar you had in the platform, or whatever that number ends up being. Aave and Compound were paid back before this process even kicked off years before that. And they got every dollar back. So forget the transparency, forget like all the other cool stuff that DeFi has offered. This is a cool use case that we haven't seen happen before. Like we've seen something usurp the US court system for bankruptcy hearings. That's crazy. And that's something that everyone should be excited about walking away from this. And the people that really are into the industry, that saw this happen and saw the value in it, they're here to say, which is why we've seen so many people just, when the price goes down, like people are excited to buy the dip for those people that are really, like I said, into the industry, because the core value proposition that crypto and DeFi offer has not changed. If anything, it's been reinforced by this entire situation that's been playing out for the past year.
Yeah, I think we're a little bit preaching to the choir, talking to our community here, and there were some interesting and good points made by Ben and by David in the chat also. And by the way, I should tell people we're a little over time, so we're going to end pretty soon. So if you want to hop into the chat with the community, come to blockchainbooze.io. When we're done on here, you'll be able to turn on your camera, hang out with some of the community members. I should be on tonight for a little bit before I run off to dinner with the family. And so come hang if you'd like, and talk about this stuff. It was pretty kind of cool to see, one of the friends of Blockchain and Booze, we've had some good chats actually. So, I constantly go back and forth because you guys know that I don't get along very well with politicians, but we've had Tom Emmer on. He came to our security token summit. He's been on Blockchain and Booze. And although I disagree on a lot of politics with him, he kind of spoke as one of the sanest people in front of the Financial Services Committee the last couple of days, or in front of
he's represented our industry very well.
He did the normal politicianing, like, are you going to XYZ? Are you going to XYZ? And kind of do that kind of questioning, posturing thing that's like necessary for those situations. But his kind of finale ending of just like, my colleagues who are purposely not paying attention and purposely avoiding this kind of thing do realize, or you should realize that, the centralization is the problem here, and what the real true value.
I actually have that minute-long clip saved, and like anyone that's reached out to me saying like, what's going on with FTX and with crypto, like, are you worried about it? Are you still invested or whatever? Are you still working in it? I sent them back the one clip saying this is a U.S. politician talking here.
Yeah, and he straight up says, and he ends it with, decentralization is the point, right? And that's how he ends it, right? Like that's freaking amazing and beautiful. And I got messages from people saying, Tom Emmer for president and this and that, and like, but for because it's so funny, right?
If you're a single policy voter, then absolutely, but unfortunately, it's not as simple.
It's not that simple, but it's funny, right? Because at the end of the day, we're such a okay, talk about humans. Like we started the conversation joking about how we're human and we have no appreciation for where we've gotten to so far, because there was a day when there was better than today. So we're gonna focus on that. But it is pretty damn funny, right? Like it's this interesting juxtaposition of like, the world we want to completely erase. When someone in that world is like on our team, you're like, fuck yeah, I love that man. like it's pretty great. But to be fair, he has even offline, like in the pre-going live chat, where I've given him a little shit and been like, there's some things in your policies I vehemently disagree with, but we're going to focus on crypto today. He'll be like, you remind me of my son, like, and he'll tell me, but what's really great about him, and I think what everyone needs to know in the industry, and what I think the world needs to know, and we've gone down this rabbit hole a little bit, so we should get back to being able to hang with each other, is that like, there's so many things, like individual topics and things that are really important to each of us. And we believe, I think a lot of us believe, and I'll speak for myself, not about Corey, but I think he does too, that this industry and the things that we can build, the building blocks for it, can be essential to freedom for everyone in the world, right? Like this idea of a borderless world and a borderless society, and everyone being able to participate regardless of anything, I think can bring more freedom to the world than anything else. Because at the end of the day, incentives are what drives people. And whether you believe that, a war is necessary or not, right? You understand that there's a whole industrial profiteering group of people who win when the war happens, and pretty much everyone else loses. And those people happen to be the largest banks in the whole entire world, and the people that were decentralized, were taking power away from, if this works, right? And that's going maybe a few steps forward, and doing things and going down that rabbit hole. But at the end of the day, I think that's crazy important. Now,
even looking at at a more simplistic point of view with it, the freedom to transact is like an underpinning of our entire Constitution. Like if you look at each of the things in the Bill of Rights, for example, like freedom of protest, freedom of speech, all these things have some kind of cost attached to them for you to exercise that right. And if the bank were, for example, not like you and just want to censor your transaction, take away your credit card, close your bank account, and all you're left with is cold hard cash, you're going to have a really tough time in this world trying to exercise whatever it is you want to exercise. Like with like the truckers, for example, in Canada, when the Canadian government had shut them down for during those protests, taking away their bank accounts took away their ability to really do anything. Like forget protesting, they just couldn't even put food on the table then at that point when you start getting their banks closed down.
It's even crazier, right? Because at the end of the day, well, it's not crazier. It's a different version of the same thing, but we just happen to live in the United States. If you live in Canada, you're in a pretty similar situation too. And even though we disagree vehemently with certain things the politicians do, we're still in a better position than in other places in the world, right? Like getting our bank accounts frozen because of a protest in a union situation like the truckers in Canada is insanely meaningful and really wild overreach of government in all of our opinions, if you're in this space, most likely. But there's women right now in Iran who refuse to wear a hijab, and the Iranian government is freezing their and their families' bank accounts because of that protest, right? And now you're talking about like human rights violations, not just like, workers' rights and unions and things like that, which is very, very important. And I believe in tremendously. It just it can ratchet up, and it could even be much worse than where we are in the United States. And where I'm getting at is these things are essential to freedom. And where I wanted to go in the original thought is like, we're going to disagree on so many things, and we can be like, Tom Emmer is a rock star when it comes to crypto regulation, financial freedom, and things like that. And I might vehemently disagree with his stance on women's rights or gun control or something like that, right? Like, and at the end of the day, we can be at the dinner table with our parents and have this disagreement and be like, you're fucking out of your mind, and argue with a brother or sister or cousin or aunt or uncle, and then we could get up at the end of the day, we could give each other a hug, and we can move on. And it seems like in politics and in recent years, we can't really do that. If you disagree, we have to like be angry with each other and hate each other. But it's not
ridiculous.
It's ridiculous because I think we all want the same thing. It reminds
me
of
it's funny, like we'll like bicker over like things like that, or over like other social issues or things. But then as soon as you talk about like someone's freedom getting taken away in a more serious situation, like everyone comes together and will agree on it. So it's like people need to take a step back for a second and realize what it is we're overall like trying to accomplish or argue for. And a lot of the things are really rooted in freedom, which is why this technology is so important to keep pressing forward with, because it really encapsulates American values well. And we think that even if you don't agree with all American values, just the idea of freedom should be something that almost everyone should agree with or want to have more of in their life. And pushing this technology forward as a conduit for getting there is so important on a global scale.
And I think that we have to understand people's full intentions on things too, right? And at the end of the day, like, and I don't even want to go into the politician side of things, because I think that then you could get into diabolical, all sorts of arguments. And I don't want you to, I don't want to be on the side of standing up for any particular politician for pretty much anything, because the people who I thought had my back turned out, I don't think, truly believe in what they believe in. They just want to stay in power, and they say what they have to say to, and we don't have to go there. But I do think that the average person is a good person, and our average friend is a good friend. And I go back to, like, I was 18 years old when 9/11 happened. Half of my friends are punk rockers, right? So super anti-government, anti-war, anti-violence, anti-everything, right? Anti-establishment. And then half of my friends who aren't in that world, a lot of them decided, let's go join the military. Why did they join the military? Because they fucking love us and each other, right? Not because they believe we wanted to go because we love George Bush and we think we should enrich him and his family and his cronies in this fake oil war, because nobody knew exactly what was going on. They were lied to, just like we were lied to, everyone else. And a lot of punks and friends of mine who were very anti-war, anti all that stuff, saw the people who joined the military as like somehow bad people. That's a stupid ass way of thinking, right? Because they're being lied to the same way we are. Same way, both sides of the COVID argument. Everyone's being lied to, but most people are actually good people and they believe in what they believe in because they're trying to do something good. We have to kind of
just
go into
want to go about their life. Also, they just like want to like go to work, come home, and spend time with their family. Like they just want to go about their life in a simple way.
Great.
And that's like what people really care about. And then people just get caught up in this larger thing of like wanting to argue about stuff that doesn't matter to them on a smaller scale, but they just get so heated on, and it gets ridiculous a bit that way. And people just need to take a step back and realize, like, what are we doing all this stuff for anyway?
And at the end of the day, you know, that kind of thought process of talking about the military folks and things like that, my friends who did join up came back home, and after they went to a war that you can believe or don't believe that they were lied to get into, they were then mistreated. The school they were promised to get paid for free, that should be free for everyone anyway, wasn't actually free. They had to jump through all sorts of hoops, and half of their scholarships didn't actually work out. The people who were injured didn't really get the proper health insurance that they were promised, and after they risked their lives to literally protect freedom, right? At least that's what they were told. And so at the end of the day, we are all on the same page. And I think that the thing we all should learn and understand is we have to work on these things to take care of each other. I think decentralizing the exchanges and things like that sounds like a silly luxury, right? It sounds like, okay, bro, go swap your tokens for some fucking cartoon apes. That is a luxury. But if you had family in Iran right now, if you had family in many parts of the world right now, you would be really hoping that they put any wealth that they had into things like this, because you're worried about dictators, you're worried about governments in a way that we're not. You know,
or if you're lucky enough to escape the country, you'll be able to escape there with your body, but without any of your wealth you might have accumulated there. And that money is extremely important. That's your livelihood. That's your ability to buy your next meal. That's the ability to buy your next plane ticket out of there if you're lucky enough to, like I said, escape. So being able to have that kind of freedom and take that wealth elsewhere is so important then.
Yeah, I 1,000,000% agree. And I think that if you go back in most of your families, not many of us are native to wherever we are right now. And if you go back, that you'll find all sorts of things, even if you are native, thinking of Native Americans or whatever. But like, you go back far enough in your family, everyone has some kind of like how they got to where they are today. And I can think back to my grandfather faked a marriage with another woman in his village so he could actually basically be allowed to leave his country to go to another country, because they were only accepting couples because, too many dudes were fleeing on their own. And so, they had to do something like that. They were going to go make some money because they couldn't bring anything with them, and then pay and try to bring their family members. In the meantime, World War II happens, 7 brothers and sisters, parents, cousins, aunts and uncles, everyone dead, right? And you can look at those extreme examples and be like, holy shit, like, okay, yeah, you're now just going down the rabbit hole with this slippery slope bullshit. But imagine if a world like this exists, if the option to do something like this existed back then. Could that war even have happened? Could any single person gain enough power by acting that way? I don't think that's possible anymore in a decentralized world. If self-custodying of assets becomes the norm, I can no longer get power by force, right? Because like, how I can't take over a country and take over everyone's, I can't take over a state-owned bank and take all the wealth away.
Germany rolls into Poland, you can't go seize Poland's bank accounts then. It's just not how it
right?
works.
It's no longer an issue. And it sounds insane. It sounds like too far, but I think that's where the really, really, talking about the importance of decentralization, I think that's probably where it goes, right? Like, it sounds insane.
Like with the mighty U.S. government banning tornado cash recently and putting it on the OFAC list, people are still able to push tornado transactions through, and there's a bunch of validators in the network that are trying to censor them. But you still only need to wait a couple minutes, and it still gets included in a block. We still, of course, we've seen a mass exodus of people that want to keep their funds in tornado cash because they don't want to deal with the hassle of tornado being on OFAC, their funds are in there, their Ethereum, etc. But if you are a true privacy advocate and need a really need a way to obscure funds like that, now I'm not recommending anyone does this, of course, because like I'm a U.S. citizen, I wouldn't touch tornado cash because of those problems. But if you're elsewhere in the world and like your biggest concern is not OFAC, it's something else, and you need to anonymize yourself, it's still a viable mechanism, and the U.S. government has not been able to shut it down in its entirety because those smart contracts still exist. They're still accessible. And
I think, and I think at the end of the day, we got to wrap up. But at the end of the day, the idea is decentralizing your own assets, decentralizes control, and decentralizes the ability for a single person or a bad actor to hurt you, right? Whether it is a CEO of an exchange who is embezzling money, or a dictator who wants to freeze your bank account for protesting against them, or anything else. The idea is making it is making it easier and freer for people to transact. And I think that's a beautiful thing, right? And I think that you can go to both ends of the spectrum. If you are the most liberal person in the world politically, you believe in people's freedom and their rights to dictate what they want to do, when they want to do it, how they want to do it in their own personal life. And if you're a libertarian, you're supposed to believe also in those same exact things. And that's where it all kind of comes full circle. So it shouldn't be a partisan issue. It shouldn't be a political issue. It's an issue of freedom that both ends of the extreme political spectrum all believe in. Now, if you believe that centralization is somehow important to freedom, or that dictators and single entities should be able to dictate how you run your life, you know, that's your thing. But I don't think any of the
Might not be the
truly
technology for you then.
Shit, I really got to get moving. But there's this really, okay, I'm not going to go there because then it goes in. But Corey, thank you so much for being on. I think we're going to jump into the chat for everyone who missed it. Blockchainbooze.io will redirect to the DGH events site. You'll be able to turn on your camera, hang with the community. Brian saying Brad Sherman. You just said that by itself. We're not going to go down that rabbit hole today. Hey guys, I mentioned today was episode 142. Next week is episode 143. If you're old enough, you know what 143 stands for. Just look it up if you don't. It's fun. If you ever had a pager or early days of SMS, then you know what 143 is for. And I'd like to use that number since it's also the closest one to the holidays. I think it's going to be already Hanukkah next week. I think so.
Yeah, it starts on the 18th.
Okay. So there you go. It'll be middle of Hanukkah. It'll be almost Christmas. Let's all have a little bit of a Blockchain and Booze holiday party next week. Maybe I'll just bring community members up on stage, update us on what you're working on. Let's toast each other and have a great year. That'll be episode 143. Corey, before we go, where can everyone follow you? Give the URL for Dolomite again. Hey, Kim, thanks for joining us. Let's see everyone in the chat.
Sure. Everyone can find me or Dolomite at dolomite.io. If you don't know how to spell Dolomite, you can spell it like the movie. It'll still redirect back to us as we start at the start of the call. My Twitter handle is at Corey Caplan 3. Dolomite's Twitter handle is Dolomite_IO. Happy to have everyone join the community and be able to chat more and talk more about what it is that we're working on. But thanks for having me again today.
I love it. It was funny. For a moment, I was like, we should have more people on to talk about DEXs and things like that. And then I was like, nah, between me and, well, you'll trigger things in me and I'll just talk for hours. So we could have done this.
Hey, or you could reciprocate it also. Like it happens sometimes.
I love it. Thank you for joining us, Corey. We're excited to see what happens and how Dolomite grows. And I'll see you guys all in the chat in a minute. Thanks, everyone.
All right.
Have a great week.